Investors' and businesses' enthusiasm for Hong Kong's equity capital markets is roaring back as Chinese companies flock to the city for fundraising, sparking a frenzy in the market that had been forsaken in recent years. Outsized deals and a state-backed push for companies listed in the mainland exchanges to seek a listing in Hong Kong have thrust capital-raising volume to the strongest first-half year since 2021, according to data from data provider Dealogic. New listing volumes on the Hong Kong Stock Exchange jumped around 8 times to $14 billion in the first half of this year, from just $1.8 billion in the same period in 2024, according to Dealogic. That excluded SPAC listings or special-purpose acquisition companies established solely to raise capital through an IPO, with the aim of eventually acquiring or merging with another company. That puts the city on track to become the world's largest listing destination this year, surpassing the NASDAQ and the New York Stock Exchange. PwC projected up to 100 IPOs in Hong Kong this year, with total fundraising to exceed $25.5 billion. The frenzy came after years of lackluster IPO activity in the city amid post-pandemic risk-off sentiment and stuttering economic growth. In the first half of this year, there were 43 new listings in Hong Kong, with proceeds topping $13.6 billion, surpassing the total sum raised in 2024, data from financial data platform Wind Information showed. In comparison, there were only 73 listings in 2023, raising just $5.9 billion, according to HKEX data. The renewed interest is fueled by a confluence of factors, including Beijing's regulatory tailwinds, the muted pace of A-share listings, ample market liquidity, and delisting fears in U.S. markets, driving mainland companies to raise funds in Hong Kong, according to Stephen Sun, head of China equity strategy at HSBC. The IPO boom in the Hong Kong market is certainly driven by dual listing of A then H shares, said Sun. A shares refer to mainland listed shares, while H shares are those listed in Hong Kong. More and more companies use the proceeds to fund their globalization strategy, Sun said, as the Hong Kong dollar is more fungible than the Chinese yuan in global markets.